Hello, ladies and gentlemen, and welcome to our interview with Carl McCauley. Carl is a CEO at 360 Factors, a software intelligence platform which empowers organizations to accelerate profitability, innovation, and productivity by predicting risks and streamlining compliance. And today we will discuss a topic on how to drive banking as a service revenues while maintaining regulatory compliance with minimized risk. Carl, thank you for coming to our interview today.
Thank you, Boris, and a pleasure to be here.
Absolutely, my pleasure too. So I believe with your background, we will have a very thoughtful conversation about your recent experience, specifically in banking and FinTech space and best practices. So perhaps our listeners can learn some stuff and implement in their companies. Carl, could you perhaps tell us a short story about your career path and what brought you to your current role and what you have been up to these days?
Sure, it's an interesting background. I'm a software developer by trade, but I've done sales and development. But maybe, man, it was about 20 years ago. I was in the space and doing some stuff around quality management. And then we started, there's this buzzword came out, Sarbanes-Oxley, this new law. And we started building solutions for that. And as that grew, you started realizing, hey, all these different regulations have similar compliance and risk requirements. And so that's what kind of led into the whole GRC, IRM buzzwords today. And I was a part of that growth at Metric Stream. So really helped grow them from a small player to one of the players today. And that was a great story. When I joined 360 Factors, what I realized is a lot of the GRC vendors out there are toolkits and they work for different industries. And banking is a very specific industry where there are a ton of regulations and compliance requirements out there. And every bank has to comply with those requirements. So while the huge banks, the large banks could deploy a GRC system, the mid-sized banks had a much difficult problem where they could not deploy technology that would help them manage risk, compliance, and regulations. Even when they could try and do that, just the ability to configure a generic tool was difficult. So at 360 Factors, we really set out to solve that problem. How do we focus on just banking and financial services in the mid-market? And how do we provide solutions that include software, but also includes content, domain expertise, and how are we solving particular problems? And so that kind of really started in the regulatory compliance, has definitely expanded into the risk management. And as we continue to look at this, we really have started moving where how does risk and compliance become more than just a back office cost function? How can those roles help a bank succeed and make themselves better? How do they actually add value to the organization rather than just being a back office function? So that's kind of a short story there, how we got to where we're at today.
Mm-hmm. All right. So can you share some best practices and lessons learned based on your latest experience? For example, without dropping the names, but if you want to, you can drop the names of your customers.
Well, I think a big part of that is, it's interesting. Banks, when you talk to them, they want to use best practices, but they have some unique components, or at least they believe they have some unique components. So if you ask a bank, hey, tell us how you'd handle this today, you'll get some unique requirements. But if you step back and look at those requirements, they can be accomplished in the same way other banks do that. So a big part of this is when you choose a software solution to help manage risk and compliance, how do you choose something that comes in out of the box solutions so that you can deploy the solutions quicker and at less cost and less risk using those out of the box solutions? We like to refer to the thing called time to value. How do you buy something and deploy it? So rather than build a system from scratch, rather than customize it, or rather than try and deploy 10 different applications all at once, pick an area or two that's the biggest pain point, deploy it quickly, show the value of the organization, and then use that to scale in other areas. And at that point, how do you use that to offer value to the organization? How do you show to the frontline business users, here's how risk and compliance can help the business. If you do that right, then you can offer a lot of value, and that just creates tremendous push to have the technology be used within the bank.
Mm-hmm. So what do you think, how banks align compliance around company strategy? and not just laws and regulation, but just to create a strategic advantage by using
Well,
this tool?
that's a great question. And that's where I think one of the shifts is really coming in, where historically compliance and even risk were seen as back office functions I had to do to manage the regulations. Well, a lot of times they're perceived as, hey, if I go to compliance, they're going to tell me what I can't do. And what do we have to do, all the work we have to do to offer this product. And so the change that we're seeing that really creates value there is, how does the group show how we're not here to stop you from doing something. We're here to show you how you can do it faster and quicker while streamlining compliance requirements and minimizing risk and understanding the risk there itself. So getting involved in the early stages of new products, new offerings, and helping them go to market quicker while minimizing risk is a key component of creating strategic value. And that really stands out around the space. We look at the last couple of years. The interesting thing about banks is they've had a ton of business. It isn't like customers have gone away. There's been a lot of opportunities. The challenge for banks is the interest rates have gotten so low, and they work off the margin, that their total net gross, the gross margin revenue that they have to operate on has gone down. So how do they introduce new products, new offerings, go after new customers in a way? And that creates risk to the bank. And that's where the risk and compliance groups can really help with that, where, okay, if we're going to do these new segments, new markets, new products, here's what we need to do. And here's how we do this to manage that. And I think that creates strategic value for the bank to allow them to grow and expand while minimizing the risk.
Mm-hmm, mm-hmm. There is a lot of buzz about artificial intelligence, ML. Tell us how AI automates risk and compliance requirements, enabling banks to do just beyond the detection with predictive and proactive insights.
Well, I think that's an interesting side. Well, I look at I'll give you some examples. I look at some of our banks, and I talked to a risk officer about a year and a half ago. He described his scenario where he would go into a risk committee, a board meeting with this risk committee on a once a quarter basis. And he would put his risk reports and his metrics together right before that meeting. And he'd get all his data, go out and capture it, and then go to the meeting. And you come to find out that the data he's presenting may be 2 or 3 months old, and in some cases maybe 4 or 5 months old. When you look at the stuff with COVID, right? What's changed is now things change within a matter of months, if not weeks. So, a lot of banks have moved to, well, how do we get quicker and more real time and bringing that data in? So that's been the trend that we've seen over the last year, is capturing KRIs and using that to detect problem areas. And so that's where people are at today. We're looking at how AI can help improve that. How do you not only look at that data, but how do you see trends? You may look at number of complaints, and it may still be within the threshold, but if you combine that with the trending of the complaints, you can detect that this is going up. That may be a problem area. Or if you can then go out and combine that with regulatory insights, maybe you look at enforcement actions. Where are the enforcement action fines coming from? Well, it's in this regulation. Use that data to compare how you're doing, and that can help predict, hey, this is an area that we may want to go explore, because while we think we have a low risk, this is a big issue for the industry, and we need to make sure we're in component with that. And then lastly, the other part is data analysis, right? There is a ton of data. There's things from the call performance reports for banks, how banks have done over each quarter, they have to report that. But how do you combine that data with interest rates, trends, construction starts? And then you look at that data over the past 20 years, there is a lot of data out there. So how do you process that, right? And AI is great at data modeling and analytics. And by using that, you really can say, hey, if we're at 2% interest rate or 3% interest rates, what happens when it goes to 4%? What does that mean to us? And what do we need to prepare for? And that can allow a more of a proactive, predictive approach, where during the risk committee, you're now discussing that, hey, what do we need to be prepared for in the next 6 months? And that allows the bank to not only make sure they're prepared for that, but they can take advantage of the opportunities that might be presented for them for that. So that's kind of where we see that AI can really help. The data modeling, data analytics really starts to bring that in, but combining that with not only internal KRIs, but with all the data from the external side of things.
Wow. It's a lot of stuff to do for bank. So what, what from your experience, what are the current this year regulatory and compliance key concerns for banks, or how can you embed into these concerns this banking as a service revenue, and so you can maintain it inside both regulatory compliance and minimize risk? How it actually works in the practice?
Well, I think this goes into one of the biggest trends we're seeing in the banks today. So when I mentioned a second ago that one of the biggest struggles for banks today is they're working with reduced margins. And so they have to grow revenue so they can increase their margins and have more operating expenses. And if you're going to grow revenue, that either means getting more customers or introducing new products and services, or both. And for a lot of banks, right, if you're a community bank, just going and finding more customers where you're in the community, that's not going to be very feasible. And offering more products becomes challenging as well, because there's only so many banks or products a bank can offer in that area. So one of the things we're seeing is kind of the shift, what I call banking as a service, that is becoming a buzzword out there, which is a lot of the FinTechs. And I'm going to define a FinTech as these websites that are coming up, and companies have these websites to market a financial services type of product, whether it's a credit card, a mortgage loan, an auto loan, or a buy now, pay now, or pay later type of a solution. There's a lot of website FinTech companies being set up to market those. And they're great, right? They're very quick at technology. They can make it very fast for the customers. They can respond quickly. But what they can't do is directly loan the money. And if you're going to loan money, you got to get it from the, you got to get it in the right places. You got to have a charter, a banking charter. You got to be compliant with the regulations. And so there's been a lot of partnerships set up where those FinTechs partner with a bank on the back end. So now the bank can offer their loan products through these FinTech people out there. And so now, instead of just being a community bank targeting your customers through your local branches, you can target any customer in the US or in the world through those partners. And you can offer more products and more services. And so that's what banking as a service is. How do you take your banking company, your bank, and offer it through these other channels, not just direct to the consumer, but through these FinTechs that they market to their customers? Now, when you do that, of course, the flip side is, well, how do you manage that? Ensure that you're in compliance. How do you make sure that you don't go out and do false advertising? If a complaint comes in because someone complained about what the FinTech said they could do, the bank, it could be the one that's liable for that. So how do you manage those issues when it's outside your direct control? And that could be complaints. It could be a marketing ad request. It could be a change in your process or your policy. How do you get the bank involved in that process? And how does the bank make sure that those FinTechs are complying with the regulations that the bank may be responsible for? Because now you have two parties involved in that. And so that really has driven one of the big trends that we've seen a number of banks, that's how they're trying to grow revenue through these products and developing these partnerships. And as part of that, that's required a solution that really helps them manage the compliance requirements through those FinTechs, both education-wise, ensuring they maintain compliance, and ensuring things are being done on a timely basis. And so that's one of the biggest trends we've seen, is that growth and new products and services really is driving more additional regulations and compliance requirements for these banks. And of course, the other side of that is, how do you manage the risk with that? Where are your risk at? Who are your risk with? Is it third-party risk? What does it mean to you? Is it worth it? Is it worth it, right? If you're bringing in $1 million worth of loans and you got a $10 million risk, is that worth that effort? How you manage that and decide where you're going to do, who you're going to partner with, those are some major trends for banks that they're struggling with how to manage that and ensure they're in compliance. And even who's responsible for that? Is it the FinTech? Is it the bank? There's unknowns there itself, though. So those are some of the big trends we're seeing there today in the space. And it's a fast moving marketplace, right? That's the one thing with FinTechs and these websites is they move quick. And that's awesome from a customer side and from an offering side, but it's challenging. I use the example last year, I believe, with the PPP loans during the COVID side. A lot of the FinTechs, that's how they came about. They were able to quickly put in place technology to go out and accept and process those loans faster than banks could. It was amazing that a number of banks could not even get the PPP loans processed before they ran out of money. But the
Yeah.
fintechs could do that, but they had to go through a bank for the back end. And that created
Oh,
some great opportunities for some banks to grow their revenue where they may not have been able to take that many loans.
okay. Yeah, I myself, I'm actually in last few years, I use some of fintechs. I send money, for example, I have a
Yep.
virtual people in Philippines. I use WeTransfer. I don't use the banks because they charge a lot of fees. I so yeah, and this fintech has kind of account in every country. So I don't think maybe they use back end on every branch they have a
Yep.
bank, but at least they have network on themselves. So
Yeah, they've got some
yeah,
partnerships in place, which you probably don't know about, but the bank
yeah,
that's behind them certainly needs to be aware of what they're saying and how they're doing it, because they could be liable. And that risk is
yeah,
there, and it's a partnership. And so it's interesting. We've seen some fintechs try and go it alone. Some fintechs will partner with a very few select partner banks, and others try and find the best rates through whatever banks they can partner with. And each one of those present different challenges for the fintech and for the bank themselves who are trying to offer those products. And you can imagine, right? If you're a community bank used to working in 2 or 3 states, and now you've got a fintech offering your products throughout the entire US or throughout the world, man, your scope of regulations just greatly increase. And how you manage that and how quickly you manage that becomes very important.
mhm. So I would like to hear your personal opinion. So, for example, what is the commonly held belief or a biggest misconception in the fintech field that you strongly disagree with?
The biggest misconception, I think is interesting. I think as the industry goes forward, where and how the money gets processed, and is it going to be a traditional banking side of things? Is it going to be a fintech taking more bank ownership? It's interesting. Some of the banks out there view the fintechs as competitors, and they may be, but a lot of banks will often view those as partnerships. And that's where I think we've seen it is a lot of banks have been resistant to allowing fintechs to offer those products. But those who have seen that as an opportunity have realized there is a ability to partner with these fintechs who can't do the regulations and compliance. It just doesn't know the skill sets. And it creates an opportunity for those banks who are realizing that. And I think that's what you've seen is there's a few banks out there. Some of ours like a Drummond Bank, a Lincoln Savings, Choice, Cross River, others who have seen this being an opportunity, and they've been able to have tremendous growth in their revenue and assets coming in, whereas other banks have not taken advantage of the opportunities. And so I think that's the big misconception is fintechs are not necessarily a competitor; they can be a partner. And you start realizing that a fintech may be great at technology and maybe addressing a customer demand, whereas the bank is great at managing credit and risk and compliance. And so both of those two parties bring some unique skill sets to the table. And so it's about figuring out where can you add for value with your skill sets and value versus where there may be a competition there. So I think that's one of the big exceptions there is. They're not necessarily, they're an opportunity just as much as a competitor, possibly.
Interesting. So finalizing, if someone who is listening to this interview would like to walk away with 1 or 2 major takeaways, what would it be? What would it be?
First, look at what you want to accomplish. Just like on the fintech side, technology can make a huge difference. But you want to consider that, hey, what can technology do to help me solve a particular problem, and how big is that problem? So when we talk to our customers, one of the first questions we ask is, what are the pain points? How much of a pain is that for your organization? And can technology help solve that? And it can. And the second part there is, how do you, from my perspective, how do you deploy software that really can solve the problem versus just deploying a toolkit? I think that's been one of the big shifts in the GRC spaces. 5 years ago, everything was about the platform and about configuration and toolkits. Today, I think people are realizing it's much more about best-in-class applications and solutions that solve a particular risk or compliance problem. So if you're looking at going after fintechs and you want to manage the compliance and risk for those fintechs, look for a solution that already does that rather than try and build something from scratch. And because again, it's about time to market and how you can deploy those products as quickly as possible and get revenue that comes in to offset the cost there.
All right, maybe last question, because I'm running a global risk community, is kind of community for risk managers all over the world. And what is your thought how we can better kind of work as a community so people understand this complex world of risk?
Oh, I think that's a great question. So, and that's where a system like ours can definitely help with I'm gonna call it the risk assessment side of things. A lot of banks view risk assessments being done on a periodic basis. An RCSA that they have to do with the business unit. Well, that doesn't work in today's world with things moving so quickly, right? It's not a static function. So how do you make risk become a very dynamic function and provide visibility to the both the risk department and to the front line using the data that's being captured? There's a lot of data now, KRIs from the internal KRIs, external trends and data coming in. How can risk take that data and make their risk thought process much more dynamic, much more consistent across organizations? So as I said, it really is about it's becoming interesting. They're looking for products to grow their revenue, but in some cases, there are a lot of different product and service offerings on how to do that. So how can the risk department help the business decide which risk is of most value and of least risk to the organization? So don't just look at revenue opportunity, but look at what's the potential downside to the risk, what's the potential effort to manage risk and compliance. And if the risk department thinks about it from that standpoint, they actually now start helping the whole executive management and sales find those new products, identify which one has the greatest value to the bank, and roll it out quicker and faster. And that's what I really stress to the risk group. It kind of changes the process from being a back office cost center to, hey, it's a strategic function that risk can help the bank grow their business and the organization and optimize their profits, their productivity, and ensure that they're not going to get fined by regulations or those kind of areas.
Fantastic. Thank you very much, Carl, for your insightful interview. And I hope it will be very kind of helpful for our users, members. And I wish you and your company steady and high growth in this coming period. And I believe that FinTech companies will see steady growth in the coming years, specifically in your area of expertise of middle banks.
Great. Thank you, Boris. It's been a pleasure talking with you today.
Bye-bye.
Bye-bye.